Senate have come to an agreement on taxes for the 2024 session. The bill has 11 components. Several of them are corrective, as with any major tax bill, but I think some of the highlights, number one, we have agreed to reduce our income taxes to 3.8% in fiscal year 25. I think the most important part about that, though, is, as you've heard me in Ways and Means Committee several times, our Republicans in the House and the Senate are committed to making sure that our tax cuts are sustainable, making sure that they are paid for, and you'll see that reflected in the bill in the section that talks about the paying for this coming out of both the ending balance and the Taxpayer Relief Fund. That's important because that gives us the cushion. When we're thinking about doing runs and thinking about what percentages to go to, we're always planning out 2, 3, 4, 5 years in advance to make sure that whatever tax relief we give back to Iowans is sustainable. And so what you'll see is something that we don't always do up here, which is a multi-pronged approach to paying for this tax cut through both the Taxpayer Relief Fund and the ending balance. There is one piece in there that I think is not going to immediately grab headlines, but is really important, particularly for southeastern Iowa, obviously, and that is the situation where Lee County has been subjected to having 2 courthouses since session law back in the 1800s. And we're finally in this bill going to give Lee County the flexibility to make that local decision on which courthouse they want to keep and which one they want to either repurpose or use for something else. That's a big deal in a small county like Lee County, excuse me, when it comes to controlling local property taxes. And they were handcuffed. Their local governments could not eliminate that second courthouse or repurpose that second courthouse because of session law. Another really important piece of the bill has to do with property taxes. And if you look at House File 718 last year, that was obviously a very significant and robust property tax reform bill that was passed almost unanimously by Republicans and Democrats. But as with any bill, we see how they work and they make adjustments based on what we're seeing. And what we saw is that there were some small towns and some small counties that were experiencing a gray area when it comes to growth. So if you remember 718 last year, if you were growing from 0 to 3%, you were held harmless. But if you grew from 3 to 6%, you were knocked down 2 percentage points in that growth to control property taxes. What we saw was a lot of our small and rural counties were growing at a rate of 3.1, 3.2, 3.3. So if they just grown 0.2% less, they wouldn't have any sort of reduction. But if they're at 3.2, for instance, they would have lost 2%, meaning that it'll go all the way down to 1.2. So we've acknowledged those concerns and we're changing the tables on growth. So the old tables were from 0 to 3% growth, you're held harmless. From 3 to 6% growth, you were docked 2%, and then from 6 and above, you were docked 3%. We're changing those tables to reflect those realities, and the new tables will be from 0 to 2.75% is held harmless. Then from 2.75 to 4%, you only get docked 1%. That's important because if you're at that 3.2 and you were being docked 2% last year, you're going to see a 50% savings and additional tax dollar flexibility for our local governments. And then finally, another piece that I don't think is going to jump off the paper in the bill as something that's significant, but it is truly significant, and that is we finally, after 20 years plus of attempting to do something about this, we give the counties the ability to eliminate compensation boards. In my opinion, and this is important, in my opinion, county compensation boards are one of the largest contributors to an explosion in growth of property taxes. You've essentially got a group of friends getting together and recommending raises for each other, with which counties cannot choose to split the difference, look at things on merit, and so you've got a autopilot Ponzi scheme of property tax growth that the local supervisors that are elected to do their job have no control over. What we do in the bill is we permit local county boards of supervisors to eliminate compensation boards. That, to me, is one of the biggest parts of this bill, ensuring that local governments that are elected by local people have an opportunity to control their own budgets and make spending decisions based on merits and not on some autopilot Ponzi scheme.
I think everyone's pretty happy about this result in the end, and ultimately this will reserve still a lot of money in the Taxpayer Relief Fund, give us another opportunity, another way to have a larger discussion here.
Can you tell us how you've talked a little bit about it in itself, but how the Taxpayer Relief Fund is used to pay for some of these cuts and I guess address that argument about using one-time money for ongoing expenses?
Sorry, say that again here. Sorry.
How is the Taxpayer Relief Fund being used to fund these cuts?
Yeah, so what it is, there's a 50% transfer mechanism built in on the budget side, so whenever the difference Ultimately, there's 50% of the tax cut will get transferred in each year back into the general fund there for purposes. I mean, it's probably the simplest way to. There's a budget mechanism there, but let's just say if if the impact is $600 million 1 year, $300 million will transfer in from the TRF, then the structural surplus covers the rest of it.
So it has to use the TRF every year going forward? Or
Well, the mechanism built that. If the revenues continue to outpace, then the TRF mechanism won't be in place. But if there is a difference this year, 50% of that will come out of TRF.
And so, did you say $700 or $800 million?
I mean, just that's on a normal REC. I mean, things are going to change every year. But just as we would look out 3 or 4 years, it might take about $700 million out of that.